Hi everyone, today I want to speak about the main order types we are going to use when we day trade. So the first one is obviously the market order. As soon as you click the buy button, you will be executed at the ask price. In this instance, it's 431.10. But when you start to do technical analysis, you become more sophisticated and you want to use the other order types. So for instance, here in this chart of the SPY, that is in real time, by the way, maybe I want to enter only if the price goes above this price. Why? Because it's a breakout of this descending trend line that acted as resistance here and here. So for that, I need to use a stop order. All right, so here, this is the entry price I want. This is a stop price. I will be using a bracket order, by the way. And this will be the target, just for the sake of this example, okay? So the target will be just above this, just in case there is a false breakout here. I want to take my profit here. And I consider this trade to be a bad trade if it goes below the previous low here, okay? So in that case, I click on the stop order and that's it. That's as simple as that. I can click take profit, stop loss if I want automatically to create the take profit order and the stop loss order. I can also right click and create limit order and then select stop order. Okay, so stop orders when it's when you are long, when you buy, the price is always above the current price. Okay, so that's one really convenient way of putting your order in the system, and then you can pour you a cup of coffee. The system will do everything automatically. Now you have the opposite, meaning that let's say you discover this chart and you are like, all right, it breaks out, but it's not really strong. I prefer to wait for another leg down. So let's pretend that you like this channel here and you say, you know what, I prefer to wait that the price goes down here. I will be more comfortable buying if it goes and touch this support descending trend line. In that case, you can do it right away by entering a limit order this time. So same tool, I will place my stop loss here, saying, for instance, that if it goes below the previous support, I consider this trade to be a bad trade, so I'm willing to lose this. So my stop loss will be there, my entry price would be there, and I don't want to be too be too greedy, but my target will be there, okay? So this is my target. In that case, basically I want to buy the dip. I want to buy the pullback, okay? So only if it does this, I want to buy here with the expectation that it will bounce and go back up again. So in that case, it's a limit order. Right click, create a limit order, and you're done. Automatically the system calculates the number of shares you have to buy in order to get a risk of $71. I can change that. I can say, okay, I'm willing to risk $500. How many shares do I have to buy? 1,000. How many money do I need to have on my account to be able to buy 100 shares? Well, it's a lot, $500,000. So even if you are a day trader, it means that you need to have $125,000 on your account, and you use the leverage of 4 to get into this trade, right? So limit order, in that case, you are betting that it will go down. You want to buy the dip for a bounce up. So that's a limit order. Now, if we go back to the initial scenario, which was I want to buy only if it breaks out. So this is a SPY. It's not really volatile per se, but if you buy some small caps with huge volume and huge volatility, when those breakouts happen, usually it goes super fast, and it might go like that, really, really fast in a span of few seconds. Okay, so in that case, you want to buy here. But if you simply put a stop order here, you might have what's called slippage. You might be executed some here, some here, some here, some here, even some here. So in average, maybe your entry price will be here. That's not good. So to prevent that, they have come up with stop limit orders. And what it means is that your entry price is there. Your entry price is there, but you set a limit. It means that you will be executed if the price go there, but as soon as it breaks out this one, it stops. Okay? So if you want to buy 1,000 shares, the drawback of this type of order is that you might only get filled for 250 maybe, but you are assured that you will be filled here. Okay? So it's always a trade-off. Do you want to be filled for the entire 1,000 shares you want, with the risk of being maybe filled in average, maybe here, like we said, or you want to be filled here with the risk of only getting 250 shares. Okay? So that's basically the 4 type of orders you need to be aware of. And in conjunction with the bracket orders, to take your profit, and with a stop loss, you are set to manage your risk. And that's about it. It's quite easy when you see it in action like that. Hope this video was helpful. See you in the next one.